surging.
Well, every year I focus on what does the market want from the biggest day of the calendar. But this year I am focusing on what does the market not want first, because that's a very small list. Actually, it's not even a list. It's just one item, which is no tinkering with the capital gains tax. There's some chatter around raising short-term capital gains tax, and there's fear that the short-term capital gains tax will be at par with the marginal rate. Also, on the long-term capital gains tax, the market is okay with the holding period being raised from 1 year to 2 years or 3 years. That's okay. But changing the tax rate or taking it at par with the marginal rate is something which will be seen very negatively. And in fact, that will raise the FII exodus from our markets, which is something that we have seen over the last few days. Now that this list is over, let me come to what does the market want. Well, what the market wants is increased spending on infrastructure. The market wants a reasonable target for disinvestment stroke privatization. The last year target was quite lofty. And the market wants more disposable income in the hand of middle class, because that would mean more consumption and those financing the consumption. Basically, the engines of economic growth. Also, I know it's tough to do, but no populism and stick to fiscal prudence. I know we're heading into big elections, but still, that's something that the market would want. In terms of sectoral view, well, the market's focus has been on defense, on capital goods, and of course on railways. But again, these sectors have already moved. But let's see if there can be further gains from here. Now, how is the market positioned? That for me is more important than anything else. The Nifty is down 2.5% in 7 days before budget. Now, anecdotally, the Nifty rallies over 3% in weeks with such positioning. The weekly move, that is, on an average, the Nifty normally falls 0.5% or 0.5% before budget and normally rallies 1.5% post-budget. I mean, some of the numbers will come up for you on the screen, and as you would see, there it is. That's the picture. Normally, you would see when the market falls more, it rallies even bigger. 2016, it fell 3%. It rallied 7%. 2018 was an exception where it fell before the budget and fell after the budget as well. Otherwise, after that, you will see if the pre-positioning is already there, if the market rallies before budget, in that case, the market falls before budget. 2020 was the best example, which is the closest to what we are right now. In 2020, the Nifty fell 3.8% before the budget, but rallied 3.2% after the budget. My sense is with the kind of positioning that we have in the market, with the FII shorts and with the sentiment where it is, the bank Nifty where it is, you do not touch capital gains tax and see the markets fly.